This episode of On the Record is brought to you by Benzie.
Associate Editor Noah Newman here, checking in from the National Farm Machinery Show in Louisville, Kentucky. Welcome to On the Record. Here's an update on what's currently impacting the ag equipment industry.
Kubota reported its 2022 earnings on February 14th, including almost $20 billion in net sales. Domestic revenue decreased by $3 million year over year to $4.5 billion, while overseas revenue increased to $15.5 billion. This put the percentage of Kubota's consolidated revenue coming from its overseas markets at 77.5%, up almost 5 points from 2021. Revenue for 2022 was up 22% from $16.36 billion in 2021. North American net sales totaled $8.21 billion for 2022, up 34% year over year. Net sales coming specifically from the U.S. came in at $7.24 billion, representing 88% of Kubota's North American net sales for last year. Revenue from Kubota's farm equipment and engine segment came in at $13.6 billion last year, which was a 24% year-over-year increase. The percentage of Kubota's net sales coming from North America came in at 41.1% in 2022, its second year of increase after a dip in 2020. For reference, North American revenue made up 23% of Kubota's annual revenue in 2013. The percentage of Kubota's net sales coming from its farm equipment and engine segment rose in 2022 for the third year in a row to 68%, the highest percentage seen in the last 10 years. This week's dealers on the move includes Brim, Huber Inc., and Hudson Inc. New Holland dealer Brim has acquired the assets of Oregon dealership Klamath Basin Equipment, a 4-location New Holland agriculture and construction dealership. Brim now has 11 locations throughout Washington and Oregon. Case IH dealer Huber Inc. has purchased the assets of Rourke's Farm Supply, a single-store Kubota dealer in Elmer, New Jersey. Huber now has 12 stores in Pennsylvania, Delaware, Maryland, Virginia, and New Jersey. John Deere dealer Hudson Inc. has acquired Classic Power Equipment in Williamsburg, Michigan, and now has 31 locations across Kentucky, Indiana, and Michigan. Now here's Noah Newman with the latest from the Technology Corner.
Thank you very much, Ben. We are taking Technology Corner on the road to the National Farm Machinery Show here in Louisville. And as you can imagine, there's a lot of new products, a lot of new technology on display here. And we actually just stopped by the Trimble booth where they announced some of their new products, including the new advanced path planning technology. Jesse Chisholm, North American Sales Director for the company, says this is going to be a game changer for growers and manufacturers. And he also says it represents the company's vision for the first steps to approaching autonomy.
It works on a desktop application that allows you to essentially go in and map a field out and then use the ability to create a dynamic path plan. This will optimize the coverage of that field depending on the vehicle size that you're using, right? So you can give it these sort of attributes about the field, the regular shape, or whether it be a 12-row piece of equipment versus an 8-row, and then it will build you an optimal path for farming that particular field, as well as load in and load out points or other logistical pieces such as unloading and loading during those field passes. So that allows a grower to then begin to optimize his inputs on the field and really start to make bigger decisions about the equipment they're going to use in the future to farm those fields.
Yeah, and Jesse tells us it's currently available through third-party OEMs. We'll have much more on precisionfarmingdealer.com. From the National Farm Machinery Show in Louisville, this is the Technology Corner. I'm Noah Newman. Back to you, Ben.
Thanks, Noah. The Purdue University CME Group Ag Economy Barometer Index rose again in January to a reading of 130, 4 points above its 2022 year-end index value. The January survey results also pushed the index 34% above its 2022 low point, which occurred last June. The Farm Capital Investment Index rose to a reading of 42 versus 40 in December, its second month in a row of growth. The index hasn't risen 2 months in a row since fall of 2020. Some 70% of growers consider now a bad time to make large investments in their farm operation. Among them, 39% considered the primary reason to be the rising costs of farm machinery and new construction, the lowest percentage seen since July of 2022. Another 25% said rising interest rates was their primary reason for not investing, down from 28% in December. The percentage of growers saying low dealer inventories was their primary reason fell to its lowest reading yet at 2%. Some 51% of growers said their farm machinery purchase plans for 2023 were lower compared to a year ago, up from 49% who said the same in December. Some 8% of farmers said their machinery purchase plans were higher. According to the results of the 2023 Rural Lifestyle Dealer Business Dealer Outlook and Trends survey, dealers are forecasting growth in their parts and service revenue from rural lifestyle customers for 2023. In their service revenue forecast for 2023, half of dealers are forecasting growth of 2% or more, with 15.1% forecasting growth of 8% or more. Just 8.5% forecast a decline in service revenue. Looking at their parts revenue, 42% of rural lifestyle dealers are forecasting growth for 2023, with 11.3% forecasting growth of 8% or more. The most common forecast for 2023 was for no change in parts revenue at 48%. Another 9% of dealers forecast a decline in their 2023 parts revenue. Whole goods revenue projections were the least optimistic among rural lifestyle dealers. Over half of surveyed dealers forecast a decline of 2% or more, with over 1/3 expecting whole goods revenue to be down 8% or more. Some 22% of dealers forecast whole goods growth of 2% or more. One dealer put his forecast for 2023 into perspective, saying, "Since we are coming off a couple of fantastic record years, we will probably lower our inventory levels a little. And keep in mind, when I project lower sales for 2023, it will be lower than 2020 to 2022, but perhaps still better than 2017 to 2019. The survey found 94% of dealers were profitable in 2022. Another dealer said the following: "With the past dramatic increase in sales, it's good to see a slowdown so inventory levels can start returning to normal." A further breakdown of these latest results, as well as an historic look back at trends among rural lifestyle dealers, will be featured in an upcoming Ag Equipment Intelligence special report. This week's Data Point is brought to you by the Dealer Success Academy. In the Fitch Agribusiness Key Themes for 2023 report, the firm stated that it believes commodity prices will remain elevated in recent historical terms despite easing from the highs of the first half of 2022. This is due in part to the elevated cost of fuel and fertilizer, which we see continuing from 2022 into 2023, as well as the negative impact of high fertilizer prices on application rates during 2022, which will continue to weigh on crop yields throughout the 2023 cycle. As always, we welcome your feedback. You can send comments and story suggestions to bthorpe@lessitermedia.com. Until next time, thanks for joining us.